In this video, we're going to cover the broken wing butterfly strategy that you can employ in your options trading portfolio. My name is Evan and you're watching HefTrade. Thanks for clicking on the video today. The broken wing butterfly on the put side is made up of 2 short strikes and 2 long strikes, with one of the long strikes on the lower side being farther away from the 2 short strikes. And that's going to create a tent or a pyramid shape in the middle of the trade, and that tent or pyramid shape is where you're going to get a large amount of the credit from. Ideally, you want the trade to stay neutral right in the middle, or you want it to move higher in order to collect the premium as you see the premium decay and keep the majority of the credit that you received in the beginning of the trade. So on the call side here, you just saw me set up a call broken wing butterfly, and that's going to, you're going to want the trade to go lower because you're selling calls. So that's going to also create a tent that's in the middle of the trade. So you either want the trade to stay in the middle where it is, or you want it to go lower. And I'll give you some examples on the chart in just a minute, but that's how you would set up the trade at trade entry for a credit. Swim, and I'm going to give you the visual of where this trade would pay off in terms of the different areas of the broken wing butterfly. So on the screen you see there's a big red spot, and that correlates to the loss that is on the high side of the chart. So if you're above this 472 line, anywhere above that is going to be a loss. If you're below the 460 area, anywhere below that is going to pretty much be a win. And anywhere below the 472, in fact, is going to be a win. But in between 472 and 460 is going to be their golden zone. So that on that's just my term that I've coined, but this area in between is kind of the golden zone where you're going to make the most money, more money than the credit received at the beginning of the trade. So if somehow, as the trade progresses, you're able to stay in this spot or get back to this spot as the price moves down or moves up or comes back by the end of the trade, then this is where you're going to end up making the most amount of money. In terms of where you would place a trade, where's a good place to start one of these trades? Because if you're a beginner and you're asking yourself, like, I don't really know where I'm going to put a trade on like this, what I would say is that you, in any trade, entry is a big part of where you want to place these types of trades. So if you're neutral or bullish about or bearish about a stock, as you've seen in the QQQ this July, let's say that you just think the Qs are going to continue going lower. Well, this is a good entry point right here, in my opinion, or an even better entry point might be when we retest this type of an area around this 480. Using the Fibonacci levels is something that I've found has been valuable to me, but that would be something that I would say is wait for a retest of an area in order to figure out if price is going to continue lower, and then you can place a trade like this above the current price. That way you can be correct on trade entry and you can see profits pretty quickly from the beginning and save yourself from the stress that a losing trade will bring if you put the trade on in the wrong location.